Anita here from Nimbus eCommerce, where we help e-commerce sellers increase their profits to take home more money. Today, I will be talking about bank reconciliations. What are they and why do they matter? If you are an e-commerce business owner, then you know that keeping your finances in order is of utmost importance. One important task in financial management is reconciling your bank transactions. But what are bank reconciliations and why do they matter in the first place? Let's get into it. Bank reconciliation is the process of comparing your company's bank statements with your own records of transactions. This is done to ensure that all transactions are accounted for and to identify any discrepancies that may be due to several reasons. Why does bank reconciliation matter in the first place? There are a few reasons why they matter. First one, it helps you catch errors, and that's the most important one. If there are any errors in your transaction records, reconciling your bank statements will help you catch them. If there are transactions missing from your accounting system, your profits may be under or overstated, and the accounts will be misleading. The next reason is it helps you detect fraud. By reconciling your statements, you can keep an eye out for any suspicious activity in your account. Nowadays, it is not uncommon that unauthorized parties can get access to your bank account, especially when you are trading online. The next reason is that it allows you to stay organized. Reconciling your statements on a regular basis, weekly or at least monthly, will help you stay on top of your finances and keep everything organized. At any time, you will know how much money is in your business and if you need to plan for any emergencies. How to do bank reconciliations, you may ask. Let's go through the underlying methodology of doing bank reconciliations. This will help you understand the process, the purpose, and the final expected result. Step number 1, get your bank records. You could do this via your accounting software like Xero or by accessing your online statements. You should be able to download CSV list of bank transactions from any online banking system. Step number 2, pull up your business transactions records. This is your ledger, register of all the money that has entered and left your business over a certain period of time. It could take the form of a spreadsheet, a logbook, or your accounting software like Xero Cloud Accounting. Step number 3, choose a starting point. This is usually the point at which you performed your last bank reconciliation. Ideally, you should start with the first day of each month and finish with the last day of the month to avoid any gaps and duplications. Step 4, run through your bank deposits, receipts, and money coming in to ensure that they match with your accounting records. Each deposit should appear as income on your ledger. Sometimes it can be a loan received. Then it will be recorded on your balance sheet statement. Step number 5, do the same with withdrawals and payments. If there are any discrepancies, remember that some payments may not yet have been taken, or check to see whether you paid using a different account. And step number 6, check your ending balance, closing balance. The final step is to make sure that your closing balance on your bank statement matches up with the balance on your accounting records. If it doesn't match, then there is an error somewhere that needs to be fixed. What problems can you encounter when doing bank reconciliations? Every now and then you will come across discrepancies and unexplained transactions when you perform bank reconciliations. There is no need to panic. It's quite normal and quite common. This is exactly why it is important to perform bank reconciliations regularly. The common cause of problems when performing bank reconciliations include timing. Transactions can sometimes take a few days to process, so they might not appear on your bank records right away. Fees. Make sure to check for any fees that might have been charged by the bank. These can sometimes be small and easy to miss. Multiple accounts and credit cards. If you have multiple accounts or credit cards, it can be easy to mix up transactions between them. The next problem you can encounter is different currencies. If you do business in different currencies, then exchange rates can cause discrepancies. And mistakes. Keystroke errors, misread numbers, and other human errors can lead to discrepancies in your records and make it difficult to reconcile bank transactions. The important thing is to not get discouraged. Bank reconciliations are an important part of financial management, and the more you do them, the easier they will become. And if you ever come across a problem that you can't solve, don't hesitate to ask your accountant for help. If you are not using any software or tools, doing bank reconciliations manually will be a very, very cumbersome task, especially if you are trading on Amazon and Shopify. Honestly, I can't see it possible to do it manually, and we don't recommend this approach. If you want to make bank reconciliations easier, there is a range of software available that can automate the process and make it hassle-free for you. This type of software can be particularly useful for e-commerce businesses, which usually have a huge number of transactions. We recommend Xero cloud accounting software. It integrates perfectly with most common e-commerce platforms, and it will make your bank reconciliations a breeze. Every transaction that goes through your online store will be exported to Xero and summarized neatly to match exactly with deposits, payouts landing in your bank account. It can be fully automated with really minimum intervention required. So you can focus on growing your e-commerce business. And the final thoughts. Doing bank reconciliations on a regular basis is an important task for any business owner, in particular for e-commerce sellers. It helps you catch errors, prevent fraud, and stay organized. And while it might seem like a daunting task, it's easy when you know how to do it, especially if you use right software like Xero Cloud Accounting. Let me just mention one more thing today. Every 2 weeks on Thursday at 10 a.m., I'm running a unique masterclass, how to boost your e-commerce profits by at least 30%. If you want to learn the exact step-by-step plan to increase your profits by at least 30% in the next 12 months, you are very welcome to join us. It's totally free. The registration link is below this video. Thanks very much for watching. That's it for today, and see you soon. Bye.